Hey everyone, today I want to share with you 5 assets that I'm absolutely never selling. These are assets that I buy, hold, and keep forever. Now in case you're new around here, my name is Nima and welcome to the channel. I'm a corporate executive with over 15 years of experience in both sales and finance. My videos break down complex financial concepts to help you on your financial journey, whether you're just starting out or if you're already a seasoned pro. So let's dive right into today's video. Now guys, the first asset that I'm buying and never selling is intellectual property. Now, when I say intellectual property, I'm talking about things like patents, trademarks, copyrights, and trade secrets. Anything that you have that is something that you created or built. These are assets that can make you a lot of money over time and give you a big advantage in the market. So, why is intellectual property so valuable? Well, owning IP means that you have exclusive rights to your creations. Whether it's an invention, a brand name, a logo, or creative works like books, music, and software, you own it. This exclusivity can lead to licensing opportunities where other companies pay you to use your IP, creating a steady stream of passive income. For example, me owning the rights to this Nima J Finance channel. This gives me exclusivity, and over time, it'll pay me dividends for actively working on it and keeping it 100% mine. In addition to all of this, intellectual property can increase in value over time, especially if the product or brand becomes popular. Another example of this would be like patented technology that gets widely adopted and that can become very valuable. Similarly, a strong branded trademark can boost the overall value of a business. And another cool thing about IP is that you can use it in different ways. You can negotiate partnerships, secure funding, or even sell it if the right opportunity comes along. Plus, guys, IP can protect your ideas from competitors, making sure that your unique innovations are safe. Take Apple, for instance. Their patents and trademarks not only protect their innovative products, but also generates a lot of money through licensing agreements. Another example is the company Disney, which holds copyrights and trademarks for its iconic characters and franchises, creating a continuous stream of income from things like merchandise, movies, and even their theme parks. In today's knowledge-based economy, guys, intellectual property is super important. Companies that invest in and protect their IP are more likely to succeed in the long run. And so this is exactly why when I'm building my brand, I'm holding on to that intellectual property and never selling. IP can truly be a game changer for ideas like this or small businesses and startups. By securing patents or trademarks early on, these companies can establish a strong market position and attract investors. I'll also mention that IP can be a valuable asset in mergers and acquisitions too. Companies with a strong IP portfolio are often more attractive to potential buyers because the IP can provide a competitive advantage and additional revenue streams. This can lead to higher valuations and better negotiation power during the process of the sale. Alright guys, now the second asset that I'm never parting with is my real estate. Now I've been investing in rental real estate for the past 10 years at least, and it's hands down the best investment I've ever made. Sure, I've had my fair share of mistakes, but I've learned that buying and holding rental properties is one of the most powerful strategies for building long-term wealth. Why is that, you ask? Well, there are plenty of reasons. For starters, real estate typically appreciates in value. In fact, 99.9% of the time, property values go up, making it a fantastic way to accumulate wealth. Holding on to real estate properties adds to your long-term financial growth. Additionally, rental properties can generate steady cash flow. You're getting paid every month from the rents that you're collecting, providing a consistent income stream. Not only does the property value increase year after year, but you're also earning regular monthly income. Another benefit is the leverage that you gain from owning real estate. As you build equity, which is the difference between what you owe and the property's value, that equity increases because you're paying down the mortgage while the property's value appreciates. This gives you numerous benefits. As your equity grows, you have more options. You can leverage it, leave it untouched, or use it in the future. Real estate offers flexibility. Plus, there are tax benefits too, like depreciation, which allows you to offset the rental income on your taxes. Now, there are so many reasons as to why having real estate in your portfolio is a smart move. Estate income, producing real estate in your portfolio, and just never selling it goes a long way. Look, when you hold the property, you can also defer any capital gains taxes almost forever if the property gets passed down to your heirs or someone else. There are truly a lot of ways to go about holding it forever and deferring legally paying capital gains taxes. Nobody really talks about it, and I'm surprised by that, but rental real estate is a hedge against inflation too. So as the cost of living goes up on a regular basis because of inflation, so do the costs of your rent that you charge people to live in or to occupy your rental property. So the property value goes up, your rents are going up too. And look guys, you don't have to worry about inflation messing up your cash flow or your monthly rents. You can pass rental property or properties onto your heirs, onto your children, etc. And you can also leave it as an inheritance to the people behind you. Like I mentioned, your kids, your grandkids, and so on. Now look, I cannot control a company in the stock market, for example, but I can control my real estate. I can control this tangible asset that I own called real estate. So for me, real estate provides a nice diversification in my overall investment portfolio, and it behaves differently sometimes, quite often, than stocks do. For example, stocks, they go up, okay? Real estate's right here going up, maybe small and not as much, but it's still steady. Now, on the opposite hand, stocks could go down. However, you do still see real estate going up regardless. It may have its ups and downs, but overall, over the span of several years, it'll go up. Let's take, for example, back in 2022, when the overall stock market was down close to, 18%? The S&P 500 was down 18% for the year of 2022. Well, that's also the year that we saw real estate prices go up quite a bit, right? So, lots of reasons that I like buying and having rental real estate in my portfolio, and I'm never selling. Even though I can get those calls and postcards in the mail from people that are trying to buy my property and wishing that they could just pay me cash to get it off my hands, you guys, I'm never selling. In addition to that, real estate can serve as a hedge against inflation. As the cost of living rises, so do the rents that you can charge, ensuring your income keeps its pace with your inflation. This means your cash flow remains strong even when prices are going up all around you. And finally, guys, real estate provides a tangible asset that you can control. Unlike stocks, which can be pretty volatile and influenced by market forces beyond your control, real estate is something that you can manage and improve. This hands-on aspect can be very rewarding and offers a sense of security knowing you have a physical asset backing your investment. The last thing I will mention is that just remember, when you eventually do buy a property and you're able to pay it off over time, now that property is yours. And with that being said, now you can do something like a cash out refinance, which essentially means that you can take a loan against your property, let's say $100,000, and now you can use that 100 to go buy another property. And this means that you still have both properties. And yes, of course, you will lose some money from your rental income on the already existing purchased property because now you have to pay back part of that loan. But hey, now you have two properties and you can build on two rental incomes. Now guys, before I dive into the third asset that I'm buying and never selling, I'd really appreciate it if you could smash that like button, leave a comment down below, and subscribe. Your support really helps this channel grow, so please show some love by smashing that like button, commenting down below, and subscribing. Now guys, the third asset that I'm buying and never selling, and I suggest that you consider buying and never selling as well, is broad market index funds, otherwise known as ETFs. Now, when I talk about broad market index funds or broad market ETFs, I'm referring to those that cover a large portion of the stock market. Overall stock market index funds like VT Sachs from Vanguard or the ETF equivalent from Vanguard called VTI, that's a total stock market ETF. Or even Schwab's equivalent, which is SWTX, right? These all cover the entire stock market. Or you've even got other options like Schwab's SPY that covers the entire S&P 500, or Vanguard's equivalent that covers the 500 top largest companies in America. That one from Vanguard is called VO as an ETF. Or you even got Vanguard's Total World Stock Market Index Fund, an ETF, called VTWAX, or the ETF equivalent VT. Now my point is this, I want large broad index funds or ETFs. Now why do I want them? Because I believe in businesses in America and worldwide. I believe that when you hold a lot of companies, all of them aren't going to go bad at the same time. I believe that for the most part in America, businesses are going to continue to thrive in my lifetime over the next 20, 30, 40, 50 years. I believe that business is still important. Business is still going to be owned by private citizens. We're still going to live under capitalism. we're still going to have an opportunity to invest in businesses, and businesses won't be falling all at the same time over a long stretch of the time in America and even worldwide. I believe in business, and so therefore, I want to own a whole lot of them in broad-based ETFs and index funds because the world runs on business. And personally, based on what I've seen with trends and the whole time that I've basically been on Earth, I don't think that that idea is changing anytime soon. Not to mention, I like broad-based ETFs and index funds because they also offer a lot of diversification, meaning that it spreads my money across lots and lots and lots of different companies in various sectors and various types of markets. And that truly does reduce my risk. Do you remember what I said earlier, guys? I don't want to take a whole lot of risk in general with my money. And because I don't like to take a whole lot of risk, you're not going to see me putting all of my money in one stock. I'd rather spend the investment out across the S&P 500 or to the total stock market in America. And investing in broad-based index funds and ETFs is fairly simple. To me and to many other investors, it's much easier than just picking individual stocks and investing in that. I personally, between my schedule, do not have the time to analyze all the individual stocks that I may be interested in. And it just changes so often, so it's hard to keep up with it. I don't have that kind of time, so therefore, I'll just take that total bucket over there called VO, or give me that bucket over there called VTI. Give me that total amount and let me evaluate the bucket as a whole, but I don't have time to evaluate all the individual stocks of that bucket. And of course, ETFs and index funds, they typically outpace inflation, so they're a hedge against inflation. And again, they require minimal effort, right? So you don't have to manage and babysit an ETF or an index fund like you have to manage and watch and pay attention to individual stocks. And guys, that's perfect for me. I like the hands-off approach when it comes to the stock market for the most part. That's why I'm buying and holding broad-based index funds and ETFs, and I'm never selling them. They're a big part of my foundation and my portfolio. Now guys, the fourth asset that I'm buying and never selling is AI stocks. Now, as you heard earlier, I just went through all of the information about ETFs and index funds and how they're better than the individual stocks. But I do have some individual stocks, and a large portion of what I have in terms of individual stocks is just specifically AI stocks. Me personally, I'm buying AI stocks and I'm never selling. Why? Because AI technology is here to stay and only grow into the future. Whether it's Apple, Microsoft, Nvidia, Google, Palantir, it doesn't matter. Now again, you might be wondering, well, why? Why doesn't it matter? Well guys, because AI stocks represent over the next 15 to 20 years at least and beyond, that's going to be big growth, especially if you're investing right now. The AI industry, guys, is expected to grow at a really staggering pace over the next couple of decades, and I mean across huge industries like the healthcare industry, the finance industry, the automotive industry, the entertainment industry, the gaming industry. You name it, that industry is going to be covered by AI. I mean, just think about how far technology has come across in the last few years between having old desktop computers to these really crazy laptops and desktop computers that just do amazing things, or even our old brick cell phones to what the iPhone looks like today, and how things like Alexa and Google Voice, all these things are just becoming so much more automated and AI is being incorporated into it. We're getting to a point where we even have robots doing things for us, like cooking, cleaning, or even helping you out if you just need a friend. Guys, I believe AI is the next big technological revolution that's here. And I've already mentioned that it's already here, and it's still at the beginning stages right now as of the time of me making this video. But just like the internet came in the late 1990s, now we have AI coming in 2020s. And I think it's going to be here for a very, very long time. So companies that are at the forefront of this AI innovation, this AI movement, I think those companies are poised for some incredible growth over the next couple of decades because I believe that AI is going to be a very big trend. AI is being built on top of already existing processes. Just to go back to what I was saying earlier, like back in the late 90s, there was no precedence for the internet, right? There was no real precedence for it at all, but today it's being built on top of technological advances that are already in place throughout different businesses. Remember, I believe in business, and if I believe in business, then what is going to be powering businesses over the next couple of decades and beyond, that's going to be AI. So, I believe in investing now, invest in AI early, and it's going to provide incredible growth for my individual portfolio and hopefully for yours as well. In my opinion, guys, AI is the next fast trend that's going to be coming. It's already here, but it's still at the beginning stages. So please take your time to research and invest soon. If you have any questions, you can always ask me, and I can share with you what I'm doing. And just remember again, with AI, there's hardware, there's software, there's data centers, there's machine learning, and there's algorithms and training frameworks. Look, there's a lot involved with AI. So for those many reasons, in my lifetime, I'm buying AI stocks and I'm not selling. Now guys, the fifth and final asset that you should consider buying and holding forever and never selling is blue chip stocks. Now, when I say blue chip stocks, I'm talking about companies like Coca-Cola, Visa, ExxonMobil, Walmart, Colgate, Palmolive, Procter & Gamble, JP Morgan Chase, Home Depot, McDonald's. Literally, I've listed everything, right? These are the companies that are solid, well-known, well-established, and pay good dividends quite often. They have good reputations as corporations. Sure, they may have their issues here and there that they've had over time or even currently, but they've been around for a long time. They have name recognition, right? So they have this established moat in whatever industry they're in. When you think about home repairs, you think about Home Depot. When you think about fast food, you think about McDonald's. When you think about a soft drink, you think about Coca-Cola. When you think about oil, you think about ExxonMobil. So these companies called blue chips have what we call a fortress, right? And a fortress is just a large, strong building or group of buildings that can be defended against an attack. So if you think about the true definition of a fortress, it's a heavily protected and impenetrable structure designed to keep enemies out. So I'm using this fortress analogy with these companies, these blue chip companies, and the reason I'm mentioning it is because they have protection. It's a competitive advantage that these companies have over other companies that may be in their industry. Now you may be asking, well, why do they have these competitive advantages? Well, because they're well established. They have a good reputation and have a long history of steady growth as a company. So I like these big blue chip stocks because as far as my portfolio is concerned, they offer a level of security like no other. Now I will also mention, of course, it's not completely risk-free, right? We know that they're not risk-free. I mean, there's risk in everything when you're talking about money, but they offer sort of a reliable long-term growth. And I'm an investor, guys, and I already mentioned, I don't like to take a whole lot of big-time risk, right? I like steady, I like reliability, I like a certain level of comfort with world-class large blue chip stocks from big-time companies that we all know and that we all believe in. That's why I'm buying and holding blue chip stocks, and I'm not selling them. So guys, there you have it. These are the 5 assets that are key to building long-term wealth, and I'm never selling them. By investing in real estate, blue chip stocks, broad market index funds or ETFs, AI stocks, and intellectual property, you can secure a prosperous future. Start building your portfolio today and watch your wealth grow over time. I want to thank you guys for watching this video all the way through. Please remember to smash that like button, put a comment down below, and subscribe. I'll see you all in the next video.